All right. Well, let's move on to one of those companies that we were talking about, Polycab. They delivered a strong set of numbers, better than what the street was working with. There was weakness, though, seen in their FMEG business, but there was very high growth that we saw in the wires and cables segment with solid margins as well. Mr. Tongia, the Executive Director and Chief Financial Officer of the company, joins us on the show. Hi, Mr. Tongia. Thanks so much for joining in. Well, give us a couple of details. Last year, you've ended close to around 14,000 crores odd. You've mentioned in the past, but FY26, you're going to be going to around 20,000 crores. For this year, though, what kind of a revenue growth should we be looking at, as a consolidated entity? And also margins looked absolutely splendid. The combined margins were at around 14% for the second quarter running. What is the broad margin band you would like us to work with for this year?
Thank you for having us. We have three businesses. One is cable and wire, which contribute almost 90% to our top line. And then we have FMEG, which contributes almost 7-8%, and very small EPC business. Cable and wire business has registered a fair amount of growth in the current year, both value as well as volume-wise. We have also forayed into exports business. The international business contributes almost 10% to our top line cable and wire. Historically, we have been playing between 11 to 13% of EBITDA margin in cable and wire, and we believe that's a safe margin to give guidance for. On FMEG, there was some softness which was witnessed in the current year. That is primarily because of the rejig which we did in the year gone by, and we believe in the current year as well as the coming year, we should be able to improve performance of FMEG. We are very comfortable with our guidance of 20,000 crore rupees of top line by FY26 with improved margins.
But what for this year, what should it be? I have a couple of counter questions out there. The FMCG business, does it grow from around this 1,200 crores odd in this year? Will it turn profitable as well, if you could tell us that? And also just focusing on the margin parameter, cables and wires business, I'm not sure whether there was any big volume growth, X of the exports. Don't you want to up that volume, that margin guidance of around 11 to 13%? So in both these two segments, if you could tell us.
Yes. So in FMEG, we are very confident. We should be able to get to 10 to 12% of EBITDA margin by fiscal 26. As far as cable and wire is concerned, indeed, there was a case of volume growth in the current year. It was in the mid-teens to high teens, generally speaking. Exports has contributed to overall growth as well. Historically, as I mentioned a while back, though we have maintained a EBITDA margin of 11 to 13%, the fourth quarter margin was significantly better than that. We were around 14% or thereabout. But I think for the purpose of guidance, we would like to remain committed to a range of 11 to 13%. And exports will continue to grow in years to come. Exports contributed 10%. Most of it has come from Americas. And we believe this is only a beginning. We can become the solution for the global cable requirement.
Okay. Got that. 11 to 13% is the margin guidance for the cable and wire segment. Got that. That's basically in Q4, that was 14.5%, right? So there is a bit of a...
14%.
14%. Got that. I just want to understand, exactly in that same business, cable and wire business, your revenues grew 15%. But if one looks at companies like Havells, one looks at companies like KEI, growth there was 5.5%, 8%. What is Polycab doing differently as compared to some of these other players? And will this continue? Is the market itself slowing a little bit and you are gaining market share? Go on.
Yeah, that's an interesting one. There is no strict comparable as far as Polycab is concerned in the industry. We get almost 90% of our business from cable and wire. The company which you refer to is known for more of its P2C. They get only 30% of cable business as part of their total turnover. In the last couple of years, we are working on Project Leap. This is a project under which we want to get to 20,000 crore rupees of top line by fiscal 26, and BCG Group is helping us in that. As a step one, what we did in the last year was we merged two of our business verticals, and that has helped us in increasing the overall cross-sell, which is why we have registered a growth both in volume terms as well as number of distributors. We have been able to improve on our NPD or new product development. We have supplied to defense, automobile, aviation, which were the sectors where we were not present earlier. We have also improved on our international approvals. We have almost all the approvals as far as US is concerned, as far as Australia is concerned. So we are trying to improve on the specifics where we were not good. In the current year, we are going to invest a lot of time and energy in improving our brand image. We are going to relaunch our brand. We are going to probably up our advertising and publicity spend to almost 2 to 3x of what we did last year, so as to ensure that we get a fair amount of share on the B2C side of the business as well.
Okay. Gandharv, hi, morning. I just had a couple of questions on the export front. You had one large institutional order this time in FY23, because of which your export revenues went to almost 1,400 crores. Can you tell us about that order? What is the quantum? And from this 1,400 crore level, how much do you think you can see on an average in terms of growth in the export business? What is the visibility like?
Yeah, thanks. There was no one-off order in the current year. There was indeed one-off order around 3 years back in fiscal 20 or 21. After that, it's a regular distribution business. We have our own distributors in geographies like US, EU, as well as Australia. We are in the process of setting up our own warehouses in a few of these geographies. And the way we have augmented our top line in the domestic arena, something similar we want to do in the export. So there is no one-off as far as current year's exports is concerned.
Can you give us a number though? What do you think your export growth could look like on an average over the next, say, 12 to 18 months?
Yeah, that's an interesting one. So we believe that we should be able to get to 10% of contribution of exports to our top line. This fiscal, we were around 9.8%. Next year also, we should be able to maintain that or improve slightly.
Okay, 10% of cables and wires business top line, or the entire entity?
Entire entity, you're right.
Company's top line. All right. I just want to clear a couple of factors. You have told us about your targets for FY26, but FY24, can you tell me? Revenue growth, what will it be for the entity from around this 14,000 crores odd? Double digits, mid-teens, 20% plus, what will it be? Let's get this out of the way.
Wonderful. That's a great one. See, what we have done is we have talked about FY26 ambition. We have not given a year-wise breakup as of now. But going by our past trend, it is quite possible that we continue with double-digit growth. But I'll come back to you during the course of the current year and give you more light on that.
Okay, double-digit, we got that. Now, in terms of market share on your cables and wires business, it's been moving up. As my colleague Prashant as well mentioned, that you've grown at a faster clip in your cables and wires business in comparison to your peers. So what is your current market share and where is that number headed? And just one more question from my end. FMEG business, does it turn around in this year? I got your FY26 goal, but in this year, will it turn around?
Yeah. So market share, we'll have to wait for the entire industry numbers. We don't have the entire industry numbers so far. We believe that we have improved our market share, but I think let's continue with the number of 22 to 24% of the organized market share as of now. As far as FMEG is concerned, we are extremely optimistic of FMEG. In the current year itself, we should be able to get to a good profitable number with a growth. We have also started commercial production in our fan factory in the month of March. The switch and switchgear factory is up and running. The B2C spend on advertisement publicity is going up. And I think all of these initiatives should help us in improving performance of FMEG, both on the top line as well as on the bottom line.
Right. Gandharv, ad spends, you said, will go up 2 to 3 times. You're reintroducing your own brand, you also said. What will ad spend as a percentage of sales be in 24 compared to 23?
At the combined entity level, it could be as high as 2%, 2.5%. In the case of B2C, it could be anywhere between 3 to 5%.
Okay. Just one more question. In the FMEG segment, I think fans is a big focus, right? I mean, that's a 15,000 crore rupee market. How is that market shaping up? I mean, we've been getting reports that newer players like Atomberg, etc., are growing very, very fast, whereas some of the legacy players are falling behind. What's happening there?
So fan industry is undergoing a bit of a change and transformation, and that transformation is for good. You would have heard about BE implementation, which will help us in improving energy efficiency of our products. And this will help at the country level as well. You are right that few of the new players have done really well. And there are a few pockets where we can also improve our performance. For one example is new product development. We would have launched almost 60 new SKUs in the current year. We have our dedicated R&D facility now. We acquired a company by the name of Silvan, and that is working like R&D unit for us. So on NPD as well as on advertising publicity, I think we can do better, and that is what we are going to do in the current fiscal.
Okay, thanks a lot for joining in, Gandharv. Appreciate your thoughts. That's Polycab. By the way,